So I was looking at some recent financial news, and IDFC First Bank seems to be making some pretty significant moves. Did you see that they're reducing their authorized share capital?
Oh, yeah, actually, I did catch that. It's quite interesting, right? They're going from about 22,905 crore rupees down to 14,000 crore rupees. It's kind of like they're streamlining their financial structure after the merger.
Right, exactly. It's all tied to that merger with IDFC Limited from last October, isn't it? And it looks like the paid up capital needs to align with authorized capital. So they're making adjustments.
Precisely. It's all about ensuring they meet regulatory requirements, with the Banking Regulation Act and all that. Basically, they can't have authorized capital be too much bigger than the actual money they have paid in.
So it's not like they're losing money. It's more of a structural adjustment, right?
Exactly. More of a cleanup. It's like they have to keep their house in order, so to speak. It's about keeping things balanced between what they could issue in shares and what they actually have out there.
Mm-hmm. Makes sense. And they need approval from the RBI and shareholders for that, I see.
Right. It's a fairly big decision. So they have to get those approvals. It's a pretty standard procedure in these situations.
Okay, so well, let's move on. I also saw that they released their Q3 FY2025 results. How did they do this quarter?
Well, their customer deposits increased significantly, nearly 29% year on year. That's a pretty solid jump, which is great for stability.
Wow, a 29% jump? That's actually quite impressive. It seems like people are trusting them with their money. So that increase was driven mainly by retail deposits, right?
Yeah, retail deposits grew by about 30%, and they constitute about 80% of their total deposits. So it's definitely a big part of their growth story, I'd say.
Okay, that's quite a bit. So, like, are we talking about savings accounts and things like that?
Yes, savings and other retail banking products. It really shows their customer base is growing and that people are, preferring to park their funds there.
That's interesting. What about their loans and advances? How have those been doing?
Their loan book increased by 22% year on year. A good chunk of that growth was from their retail book as well as corporate loans, excluding the infrastructure, which actually declined.
Okay, so growth in retail and corporate, but they're actively reducing their legacy infrastructure loans. That's quite a focused strategy, right?
Yeah, it's about streamlining their portfolio and focusing on potentially less risky sectors for the long haul,
Makes sense. Now, I noticed they mentioned something about microfinance. How's that segment doing?
Well, that's where things get a bit tricky, They're seeing increased delinquency there, which is something they're monitoring closely.
So it's like a little red flag in their portfolio then.
Yeah, but they're being pretty transparent about it. The good thing is that the asset quality of their non-microfinance book is stable, which makes up about 95% of their total loan book.
Okay, so it's contained then, or at least that's how they are framing it. What are the actual numbers looking like for their non-performing assets?
Their gross NPA is at 1.94% and net NPA is at 0.52% as of December 31st, 2024. But if you exclude microfinance, the numbers are actually better.
Okay, that's a bit of a relief. It seems like the main issue is just in that specific sector then.
Exactly. They're also increasing their provision coverage ratio, which is essentially money set aside for potential losses. That's a good sign of being cautious,
Yeah, it's like having an emergency fund ready, which is good to see. Speaking of provisions, how did those impact their overall profitability?
Well, provisions for the quarter were higher, mainly due to microfinance. So that did impact their profits.
Right. So higher provisions mean lower profit. Is that what you're saying?
That's right. Their net profit actually declined by 53% year on year, but it did increase significantly compared to the previous quarter.
So it's a bit of a mixed bag then. A drop year on year, but sequential improvement quarter to quarter.
Yeah, it's like a good comeback after a not so great quarter. The bank is navigating through some tough situations.
So how about their overall income numbers? What are we looking at there?
Their net interest income grew by 14% year on year, and their fee income grew by 20%. So their core business is doing well.
Okay, so core banking is doing fine. That's great. It seems like they've got a handle on the main banking side of things.
Absolutely. And they actually have diversified their income streams with their other businesses like credit cards, wealth management, and FASTag.
FASTag, really? I had no idea they were so big in that.
Yeah, they're the largest issuer with 22 million FASTags. I mean, they have a huge footprint there. It's like everywhere you go, you see them.
Wow, that's impressive. They seem to have their fingers in quite a few pies, don't they?
Definitely. And their wealth management AUM has grown 53% year on year. So it seems like they are attracting customers across many different segments.
So a diverse range of income streams helps create a more robust business. It's like not putting all your eggs in one basket, I guess.
Exactly. That's a great way to put it. They are really trying to reduce their reliance on just one area.
Now, they mention a merger that added capital to the net worth. What was that all about?
That merger, right, that was with IDFC Ltd. It actually added 618 crore rupees to their net worth and reduced their outstanding share count. So it's a good move for them.
Okay, so that merger seems to have had a positive impact on their capital position.
Yes. And even though profits were down year on year, their capital to risk weighted assets ratio, or CRAR, is still healthy at 16.1% with a good CET1 ratio.
Well, that's good to know. It all sounds like they're managing things pretty carefully despite the challenges.
Absolutely. The CEO, V. Vaidyanathan, mentioned that they're closely tracking the microfinance issues and they see it as a temporary problem.
Right, so they acknowledge the issue and are working on it. That's reassuring.
Yeah, he also highlighted that their universal banking business, including deposits, loans, credit cards, are all performing well, which is a very good thing.
Right. It seems like they are trying to focus on maintaining their core business while tackling those specific issues.
Correct. Now, it is also worth noting that they mentioned some pretty interesting stuff on their approach to banking. Their focus on ethical banking and customer-friendly banking.
Oh, yeah? I did skim over that. What exactly do they mean by that?
Well, they say their products are designed so well that their employees can confidently recommend them to their own family members. I mean, that's their near and dear test.
Oh, that's a pretty high standard. It's like making sure that everything they offer is something they'd be okay with their loved ones using.
Exactly. And they have a focus on transparent fees in simplified terms, and they even offer zero fees on many common services.
Wow, that's actually really customer filtered. That sounds like a huge plus for anyone using their services.
Absolutely. They are aiming for a transparent and customer-centric model. It's something they're very proud of.
I see. And they mentioned that they were the first and only bank in India to offer zero fees on those kind of services.
Yes, they are really trying to stand out by putting the customer first. They're also all about monthly interest on savings accounts and things like that.
Okay, so they're really trying to create a positive customer experience. That's a good strategy for long-term growth.
Totally. And they have a very well-regarded mobile app as well. They claim it's top-rated in India, which, for this day and age is pretty important.
Right, a good digital platform is key in today's banking environment. What else did you find interesting?
Well, they talked about their social good banking approach. They've given out millions of loans to women entrepreneurs and for lifestyle improvements.
Wow, that's quite a large-scale impact. So it's not just about profits, but also about helping people.
Yeah, it's about financial inclusion, they said, while maintaining asset quality. And they're integrating environmental, social, and governance, or ESG, principles into their work.
That sounds like a very holistic approach. It's not just about the numbers, it's about having a positive impact on society.
Exactly. And as a reminder, disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Oh, of course, that's a very important thing to keep in mind. So overall, it seems like IDFC First Bank is navigating through some challenges, particularly in the microfinance sector, but they're focusing on growth in other areas.
That's a good summary. They're being transparent about their issues and they have a diversified business model. They are really aiming for long-term growth through customer focus and ethical practices.
Right. So it is a mixed situation, but they are trying to address their challenges and continue to grow. It's like they're weathering a storm while still building their boat.
Yeah, and they're not afraid to adapt and make changes. It's pretty interesting to watch them evolve. And if you found all this interesting, then please like, share, and subscribe to our YouTube channel.
Definitely. It'll be interesting to see how they perform in the next quarter and how they'll handle the microfinance situation going forward. What do you think?
Well, I think they have the right focus, and if they can get through this, they'll be even stronger. Now, looking ahead, I'd like to see how their digital banking and customer-focused approach further impact their growth.